When most people think about tax deductions, they often assume that the real benefits are reserved for business owners, freelancers, or investors. But if you're a W-2 employee, someone who earns a regular paycheck from an employer, you might be surprised to learn that you, too, have access to a range of tax deductions. The problem is, many of these deductions are underutilized or completely overlooked, either because they seem too small to matter or because people simply don't know they exist. Yet over time, missing out on even modest deductions can add up to thousands of dollars in lost savings. Whether you're trying to boost your tax refund or simply want to keep more of what you earn, understanding what you can legally deduct is one of the smartest moves you can make. This video breaks down the top 10 most overlooked tax deductions for W-2 employees, each with the potential to lower your taxable income and give you an edge during tax season. 1. Unreimbursed job-related expenses, if you qualify under certain exceptions. Although the Tax Cuts and Jobs Act of 2017 eliminated the ability for most employees to deduct unreimbursed job expenses on their federal return, this deduction isn't entirely dead. Certain categories of workers, like performing artists, armed forces reservists, and fee-basis government officials, still qualify for these deductions under Schedule 1. That means if you fall into one of these special groups and incur work-related costs such as uniforms, equipment, or travel not reimbursed by your employer, those can still be deductible. It's easy to ignore this if you assume everyone lost the benefit, but checking your specific employment category can unlock tax savings others overlook. 2. Educator expenses, even for part-time teachers. If you're a teacher, instructor, counselor, principal, or aide for kindergarten through 12th grade and work at least 900 hours a year in a school, you can deduct up to $300, $600 if married and both spouses are educators, in out-of-pocket expenses. This includes classroom supplies, COVID-19 protective items, and even books or tech for your students. What's commonly overlooked is that this applies to public and private school employees alike and can be claimed even if you don't itemize your deductions. Educators often spend far more than $300 annually. This is a small deduction, but every bit helps, especially since it's above the line and lowers your AGI, adjusted gross income. 3. State income taxes paid in a previous year. If you owed state income taxes when filing your previous year's return and paid them during the current year, you can claim that amount as a deduction on your current federal return, if you itemize. This one often slips under the radar because many taxpayers forget to document payments made after their return was submitted. To claim it, you'll need proof of the payment, such as a bank record or tax receipt. This is especially useful in high-tax states, where state tax payments can easily push your total deductions above the standard deduction threshold. 4. Job search expenses, for the same occupation. While the 2017 tax reforms temporarily eliminated deductions for job search expenses for most employees, this may return in the future, or apply under specific state rules or alternative deductions. Prior to the change, taxpayers could deduct costs related to resume printing, career coaching, travel, or employment agency fees. For states that still allow such deductions, it's crucial to keep track of receipts if you're looking for a job in the same field. Even if federal rules change again, it's always good practice to maintain detailed records in anticipation of future deductibility. 5. Health Savings Account, HSA, contributions. If you're enrolled in a high-deductible health plan, HDHP, contributing to a health savings account, HSA, is one of the best-kept secrets for W-2 employees. Contributions are tax-deductible even if you don't itemize, and your earnings grow tax-free. Plus, withdrawals used for qualified medical expenses are also tax-free, making the HSA a triple tax-advantaged account. The 2024 contribution limit is $4,150 for individuals and $8,300 for families, with a $1,000 catch-up allowance if you're over 55. If you make HSA contributions directly instead of through payroll, you'll need to report them yourself to get the deduction, something many people forget to do. 6. Student loan interest deduction, even if you didn't finish college. W-2 employees paying off qualified student loans may deduct up to $2,500 in interest each year. What's often missed is that you can qualify even if the loan was for someone else, like your child, as long as you're legally obligated to pay it and you're not claimed as a dependent. Another often overlooked point is that you don't have to itemize to claim this deduction. It's also an above-the-line adjustment, directly reducing your taxable income. If your income is below $90,000 or $185,000 for joint filers, you're eligible, though the deduction phases out at the upper end. 7. Charitable donations without itemizing, up to $600. During tax years affected by COVID-19, the IRS allowed up to $600 in charitable cash contributions to be deducted without itemizing. Though the rule expired in 2022, lawmakers have discussed reinstating it, and several states still permit similar deductions. Even without a federal deduction, charitable contributions often qualify for state tax breaks. Always keep donation receipts, even for small amounts, and check your state's rules each year. Many taxpayers miss out simply because they assume giving doesn't pay unless they itemize, but sometimes it does, especially with shifting legislation. 8. Union dues and professional memberships, state-specific. While no longer deductible on your federal return, unless you're in one of those special employee categories mentioned earlier, many states still allow deductions for union dues, trade association fees, or professional licenses. If you belong to a labor union or a professional group, like a bar association, medical board, or educators organization, those annual fees could be deductible on your state return. With W-2 workers often feeling they have fewer tax breaks than the self-employed, this is one of the few left that can still save hundreds per year, especially in union-heavy professions. 9. Home office deduction, under very specific circumstances. This is one of the most misunderstood deductions. While W-2 employees generally cannot claim a home office deduction, exceptions exist. If you work as an employee and meet the conditions of being, for the convenience of your employer, meaning you're required to work from home with no other office provided, it's possible, though rare, to qualify. Some states also allow the deduction independently of federal restrictions. Documentation from your employer and clear proof of exclusive workspace use are key here. This won't apply to everyone, but for those it does, it can be substantial. 10. Work-related education that improves your current job. If you take courses, earn certifications, or attend seminars that maintain or improve your skills in your current job, not a new one, you may be able to deduct those education costs, especially if you're one of the qualifying exception categories mentioned earlier or if your state allows it. These can include tuition, books, supplies, and even transportation to attend classes. What's missed by most is that the IRS allows deductions for qualifying work-related education, as long as it doesn't qualify you for a new trade or profession. Even if your employer reimburses part of the cost, the remainder could still be deductible. W-2 employees often assume they have few options when it comes to reducing their tax burden, but that's a costly misconception. While the tax code has shifted in recent years, it still offers a surprising number of deductions to regular employees, many of which go underutilized simply because they're not well known or because people think they're no longer allowed. From state-specific deductions to overlooked federal adjustments like HSAs and student loan interest, the key is staying informed and organized. Keep good records, check your eligibility every year, and consult with a qualified tax preparer if needed. Tax savings aren't just for entrepreneurs and the self-employed, they're for anyone willing to look a little closer at the fine print. By taking advantage of these overlooked deductions, you can put real money back in your pocket and take one more step toward financial empowerment.